Grand rising, everyone.
Grand Rising.
It is Wednesday, October
Yay!
1st. Okay.
Hmm.
October.
Welcome to Grand Rising Elizabeth Wealth Building Wednesday. Wealth
Well,
Building
the
Wednesday.
Wednesday.
Wednesday, Wealth Building Wednesday.
Happy October the 1st, family. Oh my God. Today is not just mm, a new month. It's not just a new month, it's a new quarter, right?
Yeah. Yeah.
So, a new quarter means new seasons, new opportunities. Okay.
Yay!
It's
Hmm.
Wealth Building Wednesday. Okay. So, we're in the middle of the week. And so that means we still can reflect and end the week out strong. I'm
Okay.
just so excited, y'all. October is considered the harvest month. Did y'all know that?
Yes, yes, yes.
So
I
the
do.
seeds that you planted all year round is ready to bloom. It's ready to blossom.
Right.
So I'm so excited about that. Don't be hard on yourself if you didn't do all the things that you wanted to do in September. It's okay. Let's just focus on what we can do today. Okay. And this last quarter, going out. The future is not waiting on the New Year's. It's like right now. Let's just start right now. Let's just start right now.
That's right.
Let's make this the first. Let's make better decisions. Let's think bigger and let's walk boldly in our purpose.
Yes. Well said.
Amen. Amen. Look, I feel like I'm at church. Amen.
I know, right? I know. I
So let's
know.
start this month with faith, with focus and fire. Okay. So I'm excited about today. I didn't really know. I was struggling about what we were going to talk about today, but we're going to start with the basics today. Do I have any good news to anyone? Go ahead and open up a brokerage account from last Wednesday to now. No, what y'all doing? What y'all waiting? Well, I know most of you all have already done it already. Okay.
Yes, yes. I do have a testimony. I've been looking at my brokerage account, the stock that I have, and it's been going up a little bit because
Oh,
it's a slice, but
okay.
it's been going up. It's been fun to watch it.
Okay. That's awesome. That's awesome. Did you get an ETF? Did you get a REIT? What did you get? But
ETF,
saying,
ETF,
okay, that's what I'm talking about. That's what I'm
right?
talking about.
I know.
Anybody who doesn't know about the ETF, it's an exchange traded fund.
Right.
And we're going to actually talk a little bit about it uh today. All right, so I'm excited that you all are opening up your brokerage accounts. I'm excited that a lot of us have, started businesses, because true wealth really comes through business. It doesn't come from working for somebody else. It's either you're going to have guts and courage to open up your own business, or you're going to have guts and courage and be an owner of somebody else's business. Okay. No matter what, ownership is the key. We need to be owners. We need to be owners. So, with that being said, I'm gonna go ahead and get started because it is a lot of information, that I want to share, with you today. There we go. I'm like, where is the share button? Okay, let's see. Okay, really? I closed out everything I thought so that I would not have no problems finding. Maybe I think this might be it. It. Oh, the screen sharing the stop. All right, give me 1 second, ladies and gentlemen. Oh,
Oh,
I
okay.
can't minimize. I said I can't minimize. All right, so let me do this. Okay, I can do that. Here we go. Yay. Okay, there we go. Here we go. Can y'all see that?
Uh, yes.
Right. Do I need to make it bigger or is this good?
Um, I think that's good. What do you think? Anybody else have an opinion?
Okay. How about that? There we go.
Oh yeah,
Okay,
that's
thank you for putting it on presentation mode.
Okay. Welcome, everyone. Welcome, Aunt Sheila. It's good to see you, hon. Everybody, Sharonda, Stacy. All right, so let's get to it. Today's topic is called Back to the Basics. We're going back to the basics regarding stocks, bonds, and cash. The blueprint for wealth building. We're going back to the basics, y'all. Back to the basics.
okay.
So we're going to do an important disclaimer. All the information I'm going to share to you today in this presentation is for educational purposes only and should not be considered financial, investment, or legal advice. I am not a licensed financial advisor. I am an investor, myself, an educator. Please, any stocks or different things that I talk about, please do your due diligence and do your research. Money only has three homes: stocks, bonds, or cash. Once you understand the basics, you will never look at money the same again.
Mm.
So we just talked about stocks. Stocks equal ownership. Ownership. True wealth only comes through business. It really only comes through business, not coming from working for somebody else. It comes from ownership. You're either going to own your own business or you're going to own a piece or part of somebody else's business, or you're going to do both. Like myself, Madam Finance also owns Natural Living by Design as well, which is a health and wellness company for those who don't know, and Quantum Strategic Consulting, which Madam Finance is the face of that company. So stocks equal ownership. Can I hear somebody say ownership?
Ownership.
Ownership.
Okay. You own a piece of a company.
Hmm.
Value grows as the company grows. Just like if you had your own business, like, don't think that these companies are any different. They go through the same things that we go through as we are starting and owning our multi-million dollar businesses. Okay. They may pay dividends, which is extra income. They are higher risk. So higher risk, higher reward. Don't just buy products, buy the companies that make them. That's my mic drop for the day. Okay.
Yeah.
Don't just buy products, buy the companies that make them. Bonds equal a loan. So you lend money to a company or the government. They promise to pay it back with interest. It's lower risk than stocks, but lower return. Less
Hmm.
risk, less reward. I know you all have heard that before. Higher risk, higher reward.
Hmm.
It acts as a stabilizer in your portfolio. It's a good way to diversify your portfolio. So, example, US Treasury bonds are the safest bonds that you can actually have.
Mm.
Cash equal safety net. They're most liquid, easy to use anytime, good for emergencies. Cash is low, no growth, loses value to inflation, best used as a short-term cushion, not a long-term wealth builder. It's not a wealth builder. Cash keeps you safe, but it won't make you rich.
Mm-hmm. Mm.
Mm.
Let's get more in depth in that. I just thought that it was very important that we talk about what do you mean, Madam Finance? Cash keeps you safe, but it won't make you rich. What you mean? That don't sound right. But let me tell you, my point number one is cash equals safety. Cash in the bank is easy to use. You can grab it in emergency. If you get a flat tire, like I did over the weekend in my rental car, okay? Had flat tire. They gotta have little monies put up in my emergency for emergencies, hospital bills, job loss. That's why it's your safety net. So cash,
Mm-hmm.
safety net. My point number two is cash doesn't grow. A savings account may pay you 1 to 3% interest, but inflation averages 3 to 4% or higher.
Mm-hmm.
That means your money is losing power by standing still. If it's just standing still, it's losing its worth, it's losing its value. Point number three, what I just talked about, cash loses value. Inflation means prices go up every year. Groceries go up, gas go up, rent go up. So cash loses value. But if your money just sits in cash, it actually buys less over time. Point number four is that investments build wealth. Bonds, stocks, bonds, real estate, they grow faster than inflation. They turn today's money into tomorrow's wealth.
Mm-hmm.
Cash keeps you safe in emergencies, but it won't make you rich because it doesn't grow faster than inflation. I just feel like I need to say that again. So think about it. $100 today will be less in 10 years. That's why you use cash for safety, but you use investing to build your wealth and your legacy for your family and yourself.
Mm-hmm.
Why we should invest? We should invest because inflation's again eats away at savings. I just cannot not make sure you understand that. Your money loses power over time. Investments make your money work for you. It builds wealth, not just income, and it secures your future and creates legacy. If your money isn't working, then you're working too hard.
Mm.
Mm.
So those who are beginners, or a lot of people ask Lakeisha, I opened up my brokerage account, but I just really don't know what to invest in. I really, give me some kind of ideas. And so, I'm really, really big on savings, protection until you really, really get the grasp of investing. So I highly recommend for diversification for beginners is to invest in ETFs like Deidre does. She feels good about it. She's able to have access to multiple companies. So I'm going to explain more about the ETFs. But if you want more in-depth information about the ETFs, I mean, I advise you to go to previous replay of ETF 101. So, what is an ETF? ETF stands for Exchange Traded Fund. It's like a basket of investments, stocks, bonds, or assets that you can buy or sell on the stock market just like a regular stock. A simple analogy. I used this the last time when I talked about the ETF and ETF 101. So, think of an ETF like a fruit basket. Okay, you look in that fruit basket. Y'all see that fruit basket? Can I
Yep.
get a yes?
Yep.
So in this fruit basket, you got kiwi in there. So look at the kiwi as Apple stock. In that basket, you also have a banana. Do y'all see the banana?
Yep.
Yes.
Yep.
Look at the banana as Amazon stock. You see
Mm-hmm.
the oranges. Look at the
Yep.
orange as Google stock. Okay. Now you see
Mm.
this whole basket. So you got all these companies that's in this basket. So buying the basket ETF gives you a taste of all those companies in one purchase, right? So you got access to all of these. You benefit from all of these companies in this basket that you
Mm.
own.
Wow. Awesome.
So let's be clear, like I did at the last time we talked about ETF. I need to make sure that you got this understanding because I be hearing people on the internet. I be listening to them like that is not correct information.
Mm.
Do you own the companies within the ETF? Yes or no?
No, we don't own a company. What?
I need two people. Give me your point of view. Do you own the companies within the ETF? Yes or no?
You own shares of the company, but do you own the company itself? I would say no.
Okay. Anybody else? Do you agree? Um,
Yeah, I
with the
agree.
beautiful young lady, huh?
I agree with her.
You agree with her? The answer is no. You do not own the companies within the ETF. You own the basket. You own the ETF, but you benefit from those companies' performance that's within the.
Oh,
Right, right, right.
okay.
So are you saying that um okay, so apple, orange, all that is in there, right?
Those are the
If
companies in the
in
basket.
the basket. And if the apple left the basket, you still own the basket, whatever's in there. And yeah, okay. Not whatever's in there. You own the basket.
Of
Okay.
stocks, right? But you benefit from all the companies that's in the
That are
basket,
in there. Right.
right? But what's wonderful about this and why I say I keep looking this way because I gotta put y'all back this way so I don't be looking. So the reason why I like the ETFs is because the ETFs are professionally managed, right? So, like you say, Queen, so now you got the baskets of stocks. So you benefit from all the companies that's in the basket within the
Mm-hmm.
ETF, but it's professionally managed. So they may kick one of those stocks out that was in there at the beginning, but because it wasn't performing well, they're like, oh no, this got to go. We're gonna purchase this company instead and add that to the basket. So it's
Mm-hmm.
constantly evaluating the stocks that's in it, the ones that's performing good, they're gonna keep that they feel that is good and is gonna benefit. They keep them, or they rearranging them, or they might say, "Oh, we're gonna buy less shares of this and buy more shares of this." So they are professionally managing those stocks that's in the basket so you don't have to.
Mm-hmm. Mm-hmm.
Mm.
Mm-hmm.
Your whole job is to be consistent in purchasing, being consistent in buying your stock, being disciplined.
Mm-hmm.
Because we're not buying and hold. I mean, buying and just selling. We're buying and holding depending on what is your goals. Are you investing for 10 years, 20 years, 30 years, whatever you decide that you want this stock for or this basket for. So, you know, be mindful of that. So this is like an easy way I like to use the ETFs to see. I always like to look at the top 10. I know y'all heard me say that. Pull it up. Pull it up on NASDAQ. That's what I like to go to. Is one of them is now NASDAQ. I'll go in there, put the ETF in or the name of the ETF in there, and I like to scroll and see what's the top 10 companies that's in that ETF. It may be companies you never heard of before. It may be like, okay. And then you look at another ETF, you might be, ooh, that company is in this one and that one. That
Mm.
might be something you might want to consider to do some research on and add that to your portfolio. Like it gives you an idea. So if you're looking at these different baskets of ETFs and the same companies or some of the companies are in that, you want to maybe think about that particular company. Like, okay, well, let me really look at they got it in there. Is this in this ETF and it's in that ETF. But you also want to make sure that the ETFs that you have may not be overlapping one another. Don't have all the same companies within it. You might want to look at something else. So it's just up to your discretion, but that's something to look at. You want diversification, so you really don't want you know, all the same stocks in this basket. You might as well just work on that one basket. But that's something to think about when you not for sure, what should I be investing in? That would give you a good indicator. What they're not in their ETF for nothing. There's a reason why they're buying and how many shares. It'll tell you how many shares of that one company that they own. So that would help uh, really well in that.
Okay.
So you don't have, let's make this clear, you do not have direct ownership of the companies that's within the ETF. So while the ETF holds the stocks, you don't have direct ownership of those specific stocks. You own a share of the fund's overall portfolio.
All right. Sound
Mm.
good.
Mm-hmm.
Why beginners love ETFs and why I love ETFs. It's because it's easy to start investing, instant diversification, which spreads your risk. You can buy and sell during the market hours, low fees versus a mutual fund. Great for long term investors. It's great. You don't have to keep watching the stock market every day, all day. Oh, let me see what the stock do. Let me see that. You don't have to do that because they're professionally managed. How do you make money from ETFs? One, capital gain. You buy it for a price and then it goes up. So you sell it for more than you paid for it. That's one way. Another way, which is I love dividends. I love dividends. Is that some ETFs pay you regular income, which is dividends, and then in most cases you get the best of two worlds. In some cases, right? So whether the stock go up or down, you still getting a dividend. So if the stock go down, most of the time, long-term companies, we talked about recession-proof companies, they still gonna pay dividends. So you're still getting dividends whether the stock go up and down. It's like you're getting, double whammy, which is cool if the stock is, going up.
Awesome. Sound good.
All right, types of ETFs. There are many types of ETFs. You got stock ETFs, which is a mix of company stocks. You got bond ETFs, which we talked about that, where you when you get in the ETF, you loan the government or corporation, money, and they're gonna pay you back in interest. You got dividend ETFs, where all everything in their basket is all dividend companies that pay dividend, where you're getting paid regular income every quarter. Some may, I don't know, I haven't seen an ETF that actually pays every month, but there could be some companies that's within that ETF that could pay monthly, and then the rest of them pay every quarter, but you're going to benefit off of the dividends that's being paid. And that's his major passive income because that's what you want. That's my goal, my agenda. Everybody has a different gender. Some people like higher risk and they want the growth stocks. I buy it cheap and then it go up. But I feel like diversification is very important to have a little bit of a variety, in your portfolio and getting paid to the point to, whether you work or not work, you will be able to still be able to pay your bills. You just have to figure out what your goal is, how much do I want in dividends? Like, do I want $1,000 a month, a quarter or whatever, a month? Do I need $5,000 a month? Do I need 10,000? Do I want $10,000 every month? So that's going to be your determination. Then once you find your goal, then you start striving towards that goal. You know, I know y'all heard me say it often, and I've seen it, firsthand working at the bank. And one of the ladies, she said, I just, that's what got me started, talking about the sugar daddy thing. You know what I'm saying? We talking about sugar daddy. Girl, she don't need no sugar daddy. Her dividends was her sugar daddy. Her dividends pay all her bills. And it did. I can't remember that, but it was more than $10,000 that she was getting paid in her dividends. But she had been investing for a very, very long time. Very long time. But just like she can do it, we can do it. We can do it.
Mm-hmm.
And for some, the younger that you are, I was talking to my nephew. He is just got out of high school. He getting ready to get his first job. I'm finna work with him to show him what to do with his money. You do not just spend your money. This is what you do. And he's kind of excited about it. If he does that for 20 years, just what? I don't know how old you in you eight, I think 18, 19. He do that for 20 years. At 29, he do it for 30 years. He will be a millionaire just by doing this. Especially if he goes into um the artificial intelligence thing. I y'all, I think I broke that down last Wednesday,
You
okay?
did. You
We
did.
cannot sleep
Yeah.
on that, okay? Not at all.
Right.
So,
Mm-hmm.
with that being said, the sector ETFs, like tech sector, healthcare or energy. So artificial intelligence will fall into the tech sector, right?
Right.
So you have
Mm-hmm.
all of these companies. If you just like the sectors, you want to get all an ETF that has all the companies that specialize in healthcare. Or you want to get an ETF if you big on energy. I want to get an ETF that has all these energy companies, which I think energy is huge because a lot of things cannot function off of energy.
That's
Even
right.
artificial intelligence need energy.
Yep.
Mm-hmm.
If you big on tech companies, then you want to get an ETF that's big on tech companies. So it's different ways that you could benefit on what it is that you love and what is important to you.
Mm.
Index ETFs. They follow major indexes like the S&P 500. I talked about that um uh last month. S&P 500, which is Standard and Poor, that has 500 of the largest companies within that index, right? I hope y'all remember we talking about that. If not, go back to those slides. I think it was some really, really good
10:30.
information when we were talking about the indexes and the S&P 500. Here are some real examples of ETFs. As people that these are some really good companies to really ETFs to really think about. That's major. One of the things I also said, don't let the price be the determination on why you are not getting the stock. Is it doesn't matter. We talked about partial shares that you have an opportunity if you don't have if it's an ETF that's $500, $200, $150, you don't have that It's okay. Do you have $5? If you have $5, you can play the game. You can play in the game because you can purchase and you're going to get your share of whatever it is that you put into it. How cool is that?
That's
Right.
cool.
It's very cool. Okay. You have no excuses on why you're not taking advantage of your future. Okay, SPY, SPY, S&P 500 Index ETF. VOO, Vanguard's version of the S&P 500. You have VTI, Total US Stock Market. And I'm going to let y'all know that I have most of these ETFs. XLK, Tech Sector ETF. SCHD, Dividend ETF. I know y'all know I got that.
Right.
Yeah, so these are major companies. I advise you maybe to take a picture of the screen to really, look into this and diversify your portfolio, until you get real savvy. This is passive income to be able to do these and get passive income and build your wealth, your legacy. It can truly help. Where can you buy ETFs? On online brokerage accounts like Charles Schwab, Fidelity, Ameritrade, Vanguard, Robinhood, E-Trade. Did I say that already? Charles Schwab. Okay. So these are places that I really like. Robinhood is becoming more and more popular for the younger generation. They like fast in out in out. I still love old school because I love Charles Schwab and their customer service. Fidelity Investments is really good as well. The reason why I only have these two um, brokerage accounts is one because Charles Schwab is my favorite. Fidelity is my next favorite because Charles Schwab offers Schwab slices where you can purchase just a few. You don't have to purchase full shares of the company. You can start off with $5. Um, but they don't allow you to do partial shares of ETFs. So that's where Fidelity comes in with me. So, while I'm building my portfolio on my ETFs, I use Fidelity for that. If I'm going to purchase whole shares in Charles Schwab, I just go ahead and purchase the whole share. But if I don't have enough, or I'm trying to spread, some of the money, I'm like, okay, I'll just put the rest of that on the ETF for Fidelity. For those who do not have a brokerage account, a lot of you do, but for those who may not, could somebody tell me how much does it cost to open up a brokerage account?
$5. Or
Okay.
nothing. You can do it.
Zero,
Oh,
nothing.
how much does it cost? Not how much does it cost to buy a stock. How much does it cost to open up a brokerage account?
Zero.
$0.
Thank you. $0. It's no excuse why you can't open up a brokerage account. It doesn't cost anything. It costs money for you to open up a bank account.
It
It
does.
Sure
costs
do.
money for you to open up a credit union,
Credit union.
but it
Mm-hmm.
doesn't. I just want to just iterate that it's never too late to start building wealth, ladies and gentlemen. What matters is that you start today. The sooner, the better. Start today. Small, consistent steps, excuse me, they just add up. Don't despise small beginnings. That's what the Bible says. Y'all remember the Bible says, don't despise not small beginnings. Don't feel like you done, you waited too late. Don't feel like you behind, because God will bless your want to. He will bless you. He will bless what you have. Once you make them steps, he will make a way for you to be able to retire the way you like. You just have to believe. You just have to be consistent. A lot of us is getting ready to get our refund checks the beginning of the year. Don't spend all your money. You like I'm saying, use some of that money to make some good choices for yourself, to build wealth for yourself. Like we always spending money to everybody else, making everybody else rich. But can you make your own self wealthy? Can you make your own self rich? Can you change your situation? Because how are you going to change your situation if you keep doing the same thing over and over and over again? We got to change what we're doing. It's about ownership.
Mm-hmm.
Legacy over luxury. Every deposit into your future is a seed. You sowing a seed. You're planning for your harvest, and you will surely reap. You will surely and slowly but surely dig your way out of your situation. You got to make your money work for you. You got to make your money work for you. Retirement isn't about stopping life. It's not about stopping life. It's about living life with freedom and peace. Don't you want to live in peace? Aren't you tired of, what, Lord? Oh, where am I going to get this money from to pay this bill? Oh, this cycle, the rat race over and over and over again. Am I going to have enough of this? Am I going to have enough of that? A lot of times I look at a lot of my seniors and I'm like, oh, Lord, please. I don't want to be like that. I don't want to be on a fixed income. Just $50, $100 taken away from them, you know, just changes everything for them. They get in depression mode. When they see what's about to happen for Medicare, which is starting October the 15th, but now we can start talking about it. It just makes me sad, you know. So, you can change your situation. You can do whatever it is that you want to do. You can change your situation. So, for those who haven't opened up a brokerage account, it's going to ask you for the same thing that you pretty much needed when you were opening up your bank account: your name, your social security number, your address, those type of things. Same thing. So it's very easy, nothing complicated about it. And if you have any troubles or anything they are 24/7. So you can't say, I don't have enough time. I don't got enough time. Ooh, I'll be so busy. No, 24/7. You can call 2 o'clock in the morning, 3 o'clock in the morning, take a nap, wake up. Open up a brokerage account. I would love to see some more people say, yep, I went on and did it. Even if you didn't put no money in, at least you opened it. Putting it all together. Think of your wealth like a house. The cash equals the foundation. That's your safety. Bonds equal the walls, like the stability of your house. Stocks equal like the roof, growth, and protection of your house. The final takeaway is ETFs is an easy and affordable way to start investing. They help you build wealth with less risk and more confidence. So let's build your portfolio one ETF at a time. Let's stay connected. If I was able to share or give you some information that was you feel was very informative, please feel free. Please follow me at Ask Madam Finance. Ask Madam Finance. I thought I put all my phone in the other room. Sorry about that. Okay. Please follow me at Ask Madam Finance on YouTube, and especially Facebook. I really, really, truly would appreciate that.
Thank you.
All right. Do anybody have any questions or anything? If not, I can show y'all some stuff. See if we can.
Oh,
Yes.
I missed the part where the bond where you were talking about the bonds because I had just got on.
All right. So bonds been around for a very, very long time. So with the bonds, it's like you loaning the corporation or the government money,
Okay,
and they're while you loan it to them, they're gonna pay you interest.
okay,
Yeah, so they're gonna pay you interest, and they're less riskier, than stocks. Yeah, but you get a low rate of return. You know, it's
okay,
not so less the risk, less the reward. So you don't get as much reward as you would if you was um you know using stocks and stocks and bonds. But I
okay.
want to know what y'all think about those ETFs. I don't know if all of you all were on here last week regarding the artificial intelligence. Did anybody get a chance to maybe look at them and see what they were? Because they were amazing. If you missed it, we talked about the hype when it comes to Nvidia. Nvidia is like, no, I think it's like $4.5 trillion company in the world, and they are the number one chip holder. Everybody uses them, mostly because they're like the number one chip company. And so we talked about the whole chain, the whole supply chain from the development, from the foundation, benefiting from the foundation all the way up to the chip being made. I mean, there are so many companies that you probably haven't even heard of. But we need to benefit from because artificial intelligence is not going anywhere. This is where a time where millionaires are about to be created because it's about to get gooder, and gooder. And yes, I said gooder.
Yep, yep, yep,
I
yep.
was not being politically correct. It's going to get gooder. And we're still at the beginning stages. And so this is like really, really important that we really take into consideration about ourselves, our retirement, and leaving something to your children and your children's children. It's like, so sometimes people always say life insurance, life insurance, life insurance, which is key to helping you build long-term wealth. It's very key. That's one of the tools that the Rockefeller family used to help build their wealth and continue their wealth. And from the last research I did last year, they're still taking care of 200 people in their family.
Mm-hmm.
Wow.
200 people in their family, and they used life insurance to do that. But
Mm-hmm.
don't let nobody trick you and say, oh, about these index universal life insurance and universal life insurance. Yeah, the Rockefeller. No, the Rockefellers did not use index universal. Tell them my Meta Finance said Modern Finance said that the Rockefeller did not use Index Universal or uh, Universal Life Insurance to build their wealth. They use regular whole life insurance. Index and universal insurance was not even created at the time. So they use whole life insurance to build their wealth. And this I could tell you a little bit how, okay? Because it's really good to know things ahead of time. So when you get that money, you know what to do with it. Because if you don't have plans for your money, guarantee somebody else is going to have plans for your money, like DTE, the coach company, the whoever, cell phone. They got plans for your money. But when you have plans for your money ahead of time, you know what to do with it. You can make better choices and decisions. When you get your income tax, I want you to know, oh, this is what I'm going to do. I'm going to get me some ETFs. I'm not spending my whole, like, we got to change the way we're spending. You know, it's okay to buy those nice things. I love nice things. I still want my mansion. I still, you know what I'm saying, plan on getting me a couple toys. You know what I'm saying? I want me a slingshot. Okay? I'm getting me one of them. My old man gonna be in the slingshot, baby. Like,
More money, more money, more
more
money.
money, more money, you know. So I'm not saying don't enjoy those things, but
Cha-ching.
okay. So
Okay.
maybe you know what I'm saying. Okay, if I'm gonna drive a slingshot or whatever, can I own the company that build it?
All
Okay,
right now. All
can
right.
I?
Exactly.
Okay, I drive a Ford truck. I love my car, y'all. I just love my car, that legacy. I can't wait till she come out of the. I cannot wait for her to come out of the shop. I got all kind of accessories for her. But I own stock in Ford. Why am I sitting up here driving a Ford truck and
Yeah.
don't own the company that builds it? Okay, because eventually, you know what I'm saying, I get enough stock, it'll be paying my car note for me. Okay. So I'm
Mm.
just saying, think about the stuff that you're already using already.
Mm-hmm.
Okay. And don't just spend on the stuff that you're spending on.
Mm-hmm.
You don't know what to spend on. Start there. You like it, guess what? If you like it, other people like it too. You like
Yeah.
Verizon, guess what? A lot of people like Verizon too. So if you like it, other people like it, and every time they pay their Verizon bill, guess what? They helping you get paid. Every time they pay
Right.
their bill, you get paid. You should have no problem because every time you pay your bill, you helping them stay in business and you helping you to get paid. So I need you to like look at it, real differently. Have plans for your money because if you don't, somebody else will have plans for it. I mean, shame on us. Shame on me. Shame on you. If you're dependent on the government to take care of you, if you're dependent on somebody else, your kids or your grand, or they're gonna be money, they're gonna take care. Shame on you. If you're dependent on anybody to take care of you besides you and God. Because if you don't do it, who is going to do it? It's time to get serious. It's really time to get serious and to change, the future of our children that's coming up behind us. I really truly believe it ain't gonna be no middle class. It's only gonna be rich or poor. What if that
Mm-hmm.
happens? No middle class. It's either you're gonna be rich and you can really get yourself out a whole lot of messes if you have some money.
Yeah.
You can bless people if you have some money. Some people
Yeah.
say, I don't need that much. I don't got to have that much money. Okay, you don't need, but it's bigger than you. It's bigger than you. Then you bless some other people if you don't need all that money. Because one thing about it, when when God wants to bless you, typically 9 times out of 10, He sends someone. Okay, so every
Uh-huh.
time, who gonna help the poor? He gonna send somebody. So somebody's to help the poor. When the tsunami took place, who came to the rescue? People. He gonna send some people to help you. So don't let nobody make you feel bad because you want to be wealthy. Okay, they make you feel bad because they don't even see within themselves that they can do it.
Mm-hmm.
Mm.
They
Mm.
don't see it. And if
Right.
anybody tell you, which people try to tell me all the time, My mentor said, only poor people tell you that.
Mm.
And guess what? Every time somebody tell me, you need to slow down, you doing too much. First thing come to mind is their financial status.
Right, 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 right,
Right,
right.
right, exactly.
What is their financial status? Okay.
Right, right, right.
I go about my business and keep on doing what I gotta do.
Exactly. Way to go. Way to
Did you
go.
talk about opinion and lifestyle?
Go ahead, nah, baby. Go ahead, break it down.
Okay. All right. So I'm trying to fix my computer. But from what you're just saying, I apologize for not being on camera. I gotta find a headscarf or something. But what PAC is what I call them is Pastor Art Cartwright is if you accept somebody's opinion, you also accept their lifestyle.
Boom.
Mm.
Yes, he
Wow.
does say
I was
that.
like, ooh, when I first started him, but I'm like, he's right. And then what you saying? What is their financials looking like?
Right.
So, if we think Keisha's doing too much, I mean, but look at what all she's been able to accomplish. She has her business. She's an established author now. She's mentoring people. She's doing all these things. And she's an insurance agent, the insurance lady, by the way. She is able to start reaping these benefits every time I look up. She got a new car, new truck. She's been to Idlewild and all these vacations, cruises, and all. But we work hard and we play hard as she's trying to get us to get it through our thick skull. Maybe not y'all. Maybe it's just me. We do some of these things. If we can get our money employed and start working for us, then we can also too be able to reap the benefits of our harvest. But if we not put nothing in the ground, what about those talents and the money all this person want to put in the ground? Oh, I put it in the ground. Okay, what sense do that make? You're not getting nothing off of it being in the ground. If it wasn't a seed with that can bear some fruit, we have to make our money employed so that we can see our money grow and we can begin to enjoy some of these things and fruitfulness in all these different areas.
Well said.
Thank you, Sharonda. And she's talking about the talents, the three talents. And the Bible is one of the best business books in the world. And that's what our mentor teach. I mean, it's so many nuggets. And I've been raised in the church, baby, but I ain't never heard it the way he break everything down and what's that actually that's in the Bible.
Yeah.
Mm-mm.
And the talents, and he broke that. I have heard that so many times, but had never heard it the way he broke it down. Where you had the three talents, and you know, and they went out, had the time, they went out and produced. They went into the marketplace and produced. And when they came back, God said, well done, my faithful servant, something, well done. Then the second one went out and did it. Came went to the marketplace, came back, and that blossomed. He was happy with that. The third one thought, oh, I'm gonna have it. I'm gonna put it in the third. I'm gonna put it. I'm gonna have it. And then when he went back to God, he called him a lazy and slothful servant. Like, why didn't you take what I gave you and produce something with it? Because
Right.
we're here to produce. We're here to produce. The marketplace been around for a long time.
Right.
The
He said not
marketplace
only
is business, doing finance, doing business, doing
Mhm.
business. We're supposed to be doing business. Yes, Stacy.
not only did he call him a lazy and slothful servant, he took what he had.
And
Like,
Right.
gave
like,
it to the one who made the most.
like you
Gave
don't
it
know
to the
the
one
time.
who had 5 talents.
Right.
Added to his 5 talents and gave, and now he
That's it.
got
5 times.
7 talents.
Yes,
Exactly. Yeah.
that was good. Yeah. So we are supposed to be, producing. Even like that fig tree, the fig tree that died. You know what I'm saying? Like the fig tree was supposed to be producing.
Right.
So we are supposed to be producing. We're here to bless, to be a blessing,
Yeah.
to others. God worked through people. There are so many people waiting on us to get it together. Like, you know, what our mentor always says that God need more good people with money. More good people with money that can make some change. You can't really make changes if you don't have no money politically. You know, you have enough money, you can change a whole lot of stuff. And if
Mm,
we collectively come together as a unit with money, because money talk,
I know.
money talk. So don't let nobody make you feel bad because you want to be wealthy, you want to be rich. Because a lot of people used to always, you know, try to make it seem like it was a bad thing. You know,
Mm-hmm.
money is the root of all evil. Money, no, it says the love of money. It says the love of money is the root of all root.
Yeah.
Only broke people say that
Right.
as an excuse as to why they are in the situation that they are in, you know.
Hmm.
Mm-hmm.
I think it's a lack of money is the root of all evil too,
Mm-hmm.
because people do some things because they don't have money.
Yeah.
Wow, that's a good way of putting that. Okay.
Yeah. 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 Yeah.
It's good to see you, Dr. Riola.
Mm-hmm.
Yeah, so so I just want to, we got 3 more minutes, and I did take some notes.
If you don't mind me asking, what was the chip um ETF?
Oh, to my Nvidia. That's
Oh,
like
that's
the
the
number
one you
one. That's
had
like
recommend.
4.7. That's like, I think, 4.5 trillion. It's in the trillions of like the biggest company now. And
Oh, okay.
yeah, that's something to look at. You know, last week I broke down the top 8 companies that's big in the
AI.
artificial intelligence space that a lot of people are looking at, but they're missing out on the whole foundation from the designing company, the companies that design, the manufacturers that has to be like the chip can't be even made without all of these other companies that's involved in the artificial intelligence and the hardware from packaging, licensing, because they have to be licensed to be able to do everything that they do when it comes to artificial intelligence. You know, there's a ton of companies along that supply chain. So I'm talking about from the foundation going all the way up until the chip is actually made. We can't miss out. If this company is at 4.5, what do you think about those other companies that has to be involved in the chip making process? Okay. Well, we can't play.
Yeah.
We got to get in the game. Okay, we got to get in the game.
Yeah, Keisha, that was one of the things that I really liked that when you did that presentation of how important every step is, and that you don't have to just uh
Chase the hype.
invest the high because of any of these breakdown, it's going to affect that. It's
Come
going to
on.
affect it. It's going
Boom.
to affect it. Yeah.
And you made a good analogy. You said you can't bake a cake without the flour. I said she got
Right.
it.
Right. And then I'm
She
here at
got it.
car holder services. So I started, so it's my anniversary coming up 10/10. So have been here 3 years. And that when I first started, they were like, it was so many people calling, where's my debit card? Where's my credit card? We have a chip shortage.
Mm.
We have a chip shortage.
Okay.
It was a
Yeah.
real thing. And it's happened about twice since I've been here in 3 years. So
Mm-hmm.
they were
Mm.
waiting three over 30 days for their cards to come.
Mm.
Wow.
Yeah.
Yeah, so it's 10 o'clock. I hope this was, very helpful. Something to really, I want to give you all actionable steps, things that you can actually do now. So there is no excuses why you're not advancing. Just take baby steps. You don't have to make no large steps, but it's 10 o'clock. I did not, one of the things I realized I didn't do was do my success story, but it's okay. It's 10 o'clock. I'll do it. next time.
Yeah.
So let's give ourselves a hug. You know, sometimes we have to give ourselves some love and grace because I had to do that September the 27th. I didn't get a chance to tell y'all. A sister ate her some sausages. A sister had two sausages off the grill at LeGrand's house. At my house, at Miss LeGrand house, I had two sausages and they were so good.
Good.
I went 145 days and I messed up. I was actually on Red's birthday and my aunt's birthday. I messed up and ate me some sausages, but I gave myself some love and some grace, okay?
Okay.
And I'm starting again.
Again.
Okay.
I'm starting again. And thank you, Stacy. I love you so much. I read part of your comments. I can't wait to read it again. I love you so much. It's no way that I'm not going to be able, or you all are not going to be able to reach your goals with this support system that we have right here. It's no way.
Ashe.
Yeah, it's no way. So let's hug the world because the world needs hug too. And let's sprinkle love and light to all of those that's in authority because they need it. They need it real bad. We never know what can come out of us sending love and light to those that are in authority. So I thank you, Miss Edwards, Stacy, Sharonda, everybody for coming. Evelyn, hey, Machiavelli. I like that name, Machiavelli. Okay. Welcome, 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 everyone. And I love y'all. Have a wonderful and fantastic quarter. This is our fourth quarter. Let's hold on in.
Let's do it.
Yes, let's do it. Love you all. See y'all next Wednesday. Well, building Wednesday. Well, building
Bye
Wednesday.
bye. See you later.
Lakeisha, stop your recording and hold on a second. So did you stop it?
Nope, wait a minute. Let's see. I'll hit here. Okay.
Okay, so when you're looking at us,